Welcome to the deep dive. This is where we take that stack of sources you've shared, articles, data points, all that stuff, and we really dig in to pull out the key insights, hopefully helping you get informed fast. So today we're diving into a really interesting mix of headlines, specifically from June 7th, 2025. These came from various financial news snippets you sent over, giving us a snapshot of, well, everything from corporate moves to market performance, even some specific trading action.
Yeah, and a bit of tech news squeezed in there too. So our mission, as always, is to unpack these different pieces, see what they might tell us about the current landscape, and pull out what matters most for you. Okay, let's get into it.
Absolutely. And what's great about looking at these together is, sometimes seemingly random reports, they can actually connect. They paint a broader picture, showing different angles of maybe the same market dynamics playing out. It's quite revealing sometimes.
Totally agree. Okay, so first up, a number that really jumped out from the sources was MSTR's performance. The headline highlighted MSTR skyrocketing.
hmm
Get this, 126% in just 1 year. Wow, 126%.
Yeah.
That's significant.
It is. And the source made a point of comparing it, saying MSTR was crushing the gains of Tesla, Bitcoin, and Meta over that same time. Now, obviously, we know MSTR has this Bitcoin strategy, but the source just lays out this stark comparison. What does that kind of outperformance against those particular names really signal?
Well, yeah, 126% on its own
Yeah.
is impressive. Right. But that comparison the source makes is, I think, the really interesting part. You've got Tesla, Bitcoin, Meta. They're huge benchmarks for tech, digital assets, the wider market. So for MSTR, which is known for its very specific Bitcoin focus to beat not just Bitcoin itself, but also giants like Tesla and Meta by that much, it kind of suggests that maybe its specific strategy or perhaps other factors unique to the company had some serious momentum that year, more so than the general trend you'd see in those other big assets. It looked like a very specific high conviction approach really paid off, according to this source anyway.
That makes sense. A specific strategy hitting it big. Okay, shifting gears a bit. Your sources also flagged some big corporate news. Let's start with Arca and Circle. The detail here was pretty stark. Arca completely divested,
Right.
sold all their Circle shares.
All of them. Okay, that's a strong move.
Right, and the source gave a specific reason, a dispute over Circle's IPO allocation.
Yeah.
It even mentioned Arca's CIO, Jeff Dorman, publicly criticizing how those shares were allocated. So an argument over IPO shares led to a complete exit. That feels like a big deal.
Oh, absolutely. That's significant. It really raises questions about, the behind-the-scenes stuff in big financial events like an IPO, especially in this space. IPO allocation, deciding who gets shares before public trading. That's critical for institutional investors like Arca. So for a dispute over that to cause a complete sell-off, it suggests a really fundamental disagreement. And the source mentioned potential impacts on USDC, Circle stablecoin, and maybe wider market reactions. It just shows how these internal corporate issues, particularly around sensitive things like going public, can ripple outwards and, potentially affect things lots of people use, like stablecoins and even investor sentiment.
Yeah, those knock-on effects are important. Okay, speaking of major platforms, another source focused on Coinbase. This update came straight from the CEO, Brian Armstrong. He announced a pretty substantial improvement.
Oh, yeah. What was that?
An 82% reduction in account freezing issues.
82%. Wow, that's
Yeah.
that's a massive drop.
Exactly. And he apparently also pledged, ongoing improvements and more transparency for users. But that 82% number for a major customer pain point like frozen accounts, that really stands out.
It really does. For a platform like Coinbase, trust and just the basic user experience are everything, right?
Yeah.
Account freezing is hugely frustrating for users.
Yeah.
It stops them accessing their funds. So hitting an 82% reduction, assuming that number is accurate, that's a huge operational win. It clearly signals they're focusing hard on fixing those friction points, improving reliability. That's crucial for keeping users happy and growing, especially at their scale. Shows they're tackling known problems.
Definitely. Okay, here's another interesting corporate story, but from a different angle. This one's about Greg Kidd acquiring a controlling stake in No Labs. So the sources laid out that Kidd is stepping in as both CEO and chairman after this acquisition.
Okay, new leadership.
And the way he acquired the stake is interesting, too. The source said he used a mix of Bitcoin and cash.
Using Bitcoin for an acquisition.
Yeah, and under him, No Labs is adopting a whole new treasury strategy, a Bitcoin treasury strategy. And the source gave a really specific figure here. Bitcoin making up 82% of its AMRAM, and that's where this snippet cut off. 82% of its AMRA.
Huh. 82% of its ARA. Yeah, that likely means market cap, or maybe it's the total treasury assets. Either way, 82%, that's a very significant allocation. What's really fascinating here is seeing Bitcoin used in two distinct ways. One, as part of the payment for the company's stake itself, alongside cash, and two, designating it as such a massive chunk of the company's actual treasury. A company's treasury is usually, cash management. Putting 82% into Bitcoin, if that's what AM implies, is a huge, very high conviction bet on a non-traditional asset for corporate funds. It's a pretty powerful example of companies getting more comfortable using Bitcoin strategically, not just holding it on the side.
Yeah, definitely shows a certain level of conviction, doesn't it?
Yeah.
Okay, let's pivot now towards market sentiment, some trading activity that your sources picked up. One headline specifically mentioned whales.
The whales. Always interesting to see what they're reportedly up to.
Right. So the context here was that Friday, June 7th, saw some optimism in global markets. And the source tied this directly to some macro data. The U.S. jobs report for May, it showed 139,000 jobs added, which beat the expectation of around 125K.
Okay, a better than expected jobs number.
Yeah, and unemployment held steady at 4.2%. So solid data. But then the source connects that data point to this specific trading action. Whales go all in on BTC calls. And the title was intriguing. What they know that you don't.
Okay. So linking macro data like jobs reports directly to big crypto trades, that's becoming more common, isn't it? The source seems to be suggesting these large players, the whales, might be seeing this positive economic news as a trigger for bullish Bitcoin bets, those call options. And that headline, what they know that you don't, implies maybe they have some edge, perhaps interpreting the data faster or differently than the average trader. It definitely points towards, a growing sophistication, this blending of traditional macro analysis with crypto market moves. It raises interesting questions about information flow.
It really does. Okay, another specific trading story your sources included involves someone named Ogle betting against Trump.
Against Trump, okay.
Yeah, the action was specifically shorting Trump, so betting the price will go down. And the source gave the details. It was a $1 million trade on a platform called Hyperliquid using 10x leverage.
Wow, okay. $1 million short with 10x leverage? That's a high-risk play.
Definitely. And the source even noted the liquidation point. If Trump hit $12.49, the position would be liquidated, risking the whole million.
Yeah, that's a textbook example of high-stakes speculative trading. Shorting a token like Trump, which can be really sentiment-driven and maybe less tied to traditional fundamentals, that takes guts. And the 10x leverage just magnifies everything. You're controlling $10 million worth with $1 million. Huge potential upside if you're right, but that liquidation price at $12.49 shows how quickly it can go wrong. If the price just moves up a bit against you, poof, the million is gone. It really highlights the kind of risk some traders are taking.
Puts it in perspective, for sure. Okay, finally, there's just a quick tech update tucked into the sources you sent. Google apparently revealed an enhanced preview of Gemini 2.5 Pro.
The next iteration of their AI model.
Exactly. And Google, according to the source, is calling it their most intelligent model so far, just noted as an improvement on the existing Gemini 2.5 Pro.
Right. And while, that specific piece isn't directly about crypto, the continuous rapid progress in AI, like with Google's Gemini, it's definitely relevant. It's part of the broader tech landscape that constantly intersects with digital assets, right?
Yeah.
AI impacts data analysis for trading, maybe even parts of future decentralized systems, improving infrastructure. It's a foundational technology evolving super fast, right alongside everything we're talking about in the digital asset world, worth keeping an eye on.
Good point. So looking back at all these headlines from just that one day, June 7th, based on your sources, we've seen everything from massive stock gains like MSTR to big corporate shifts like Arca ditching Circle over an IPO issue. Major platforms like Coinbase making operational fixes, a company like No Labs going big on a Bitcoin treasury and using Bitcoin for acquisitions.
Yeah, and then the market side. How macro data might be driving whale activity.
That specific high-leverage short bet against Trumpy.
And even that AI update from Google.
Exactly. It's such a diverse mix of activity just from one day snapshot. Really shows how busy this space is.
It really does. And what's fascinating, I think, is seeing concrete examples of all the different forces pulling and pushing in this space at the same time. You've got company strategy, global economics, individual trader psychology, and risk-taking underlying tech development. It all feeds in. These headlines really underscore that complexity.
Absolutely. And why does digging into these specifics matter for you, the listener? Well, hopefully it gets us beyond just hearing that something happened, to starting to grasp why it might have happened. Why would ARCA divest completely? Why put 82% of a treasury in Bitcoin? What does 126% gain actually mean compared to benchmarks? Understanding those specific figures and actions gives you, hopefully, more solid reference points for making sense of this constantly moving market.
Exactly. And maybe that leads to a final thought for you to sort of mull over. Given just how varied the news is, even in single day, you've got jobs reports, IPO disputes, massive treasury shifts, like that potential 82% into Bitcoin. How do you filter all that? How do you connect those dots? What pieces of information do you find most crucial for building your own understanding or even informing your own strategy?
That's a great question to think about. Thanks for joining us on this deep dive today. Keep digging into those sources, keep asking questions, and keep making those connections.